very warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Agbarago. It's Wednesday, the 4th of March. We thank you for joining us at this time on the show.
All right, let's tee off with your news now. Absa Kenya has reported a modest 9% profit growth for full year 2025, reflecting stable performance despite challenging market conditions. During a breakdown of the results, Managing Director and CEO Abdi Mohammed outlined key drivers of the performance, highlighting operational gains, risk management, and strategic initiatives for the year ahead. Let's listen.
I think the overarching message and the key words there is resilience in the growth of Kenya's GDP. We've seen over the last 3 or 4 years, I think we are showing up to 2024 there. But even if you extended that to 2023, 2022, the growth has generally been in that ballpark of about 5%, which continues to remain higher than the Pan-African average and also higher than the global growth average. And it's been a consistent story. It's a multi-sector growth story, and it's a very well-diversified growth. And we believe that it is sustainable, of course, subject to everything else that is happening. And we look forward to that stability. So resilience is a word. Stable is another word. We've had stability in some of the key metrics around inflation, the FX markets, and a number of other areas that have shown really resilience and stability over that period of time. You will see extreme right there what's happened to the CBR, which is the benchmark rate that drives the cost of credit in the industry. Again, a consistent drop quarter on quarter from around 13 all the way down to 8.75, which is the first time in a few years that we've gone below the 9% mark. And this is quite important for the market. It's important because that figure drives the private sector lending total volume.
In Uganda, private sector activity strengthening in February, supported by higher consumer demand, which boosted output, new orders, and employment, according to the latest Purchasing Managers Index, PMI, by Stanbic Bank Uganda and S&P Global. The Stanbic Bank Uganda PMI rose to 54.2 in February from 52.6 in January, indicating a continued improvement in business conditions and marking the 13th consecutive month of growth in the private sector. In other news, the Bank of Namibia and South African Reserve Bank has signed a new memorandum of understanding in Pretoria, replacing a previous pact to reflect changes in financial regulation and the growing complexity of cross-border banking groups. The framework formalizes cooperation on supervision, regulation, and crisis resolution planning, while enhancing coordination on monetary and financial stability issues. The agreement aims to strengthen crisis preparedness and improve depositor protection in both countries. In other news, First National Bank Botswana has reported profit before tax of 1 billion pula for the 6 months ended December 31, 2025, reflecting a flat performance amid a tougher economic environment. Addressing the results, Acting Chief Financial Officer Orapeleng Senwelo said the period was characterized by elevated credit risk, rising funding costs, and increased liquidity pressures across the market. Here are excerpts.
So when we look at our income statement performance, we've stayed flat year on year and reporting a PBT of 1 billion. Okay? And as I've indicated, this is just simply demonstrating the resilience of our financial performance. Consider, the sort of challenges that our economy is going through, right? If I start at the top line, if you look at our income, our net interest income, and this is the most, challenged line, just coming out of the fact that obviously we've seen the cost of funding going up, credit risk heightened, and therefore what we needed to respond on is to be as responsible as we can to ensure that, we do not increase the risk or credit risk, or we ensure that we maintain sustainable returns even during this period. So our net interest income has gone up by 15%. This obviously is supported by the growth on our advances at about 4%. And then what we've also done during this period is adjust our prime lending rate by 100 basis points. So that 15% comes from that, is contributed to, but those specific changes that we've done, particularly on the PLR level. But then when you look at the interest cost, it is up 110% year on year. And this is on the back of the fact that we've seen the cost of funding going up. So
in the meantime, Kenya's private sector growth slowed in February as weaker performance in agriculture and manufacturing offset gains in construction, wholesale and retail and services, a survey showed. The Stanbic Bank Kenya Purchasing Managers Index fell to 50.4 in February from 51.9 in January, signaling a modest expansion in business activity. Uganda is advancing an ambitious tenfold growth strategy seeking to expand its economy from around $50 billion in full year 2023/2024 to $500 billion by 2040. The strategy is driven by the ATMS model, agri-industrialization, tourism development, mineral development, and science, technology, and innovation, with the aim of creating jobs, boosting exports, and transforming the country's economic landscape. Let's listen.
During this period, Uganda has registered historic export growth to over $13.4 billion, although trade has a trade deficit. And so it should be one of the reasons we must sit here to analyze why we are having an overall favorable balance of payments, and then trade, we are having a trade deficit. So despite registering this historic growth of 13.4 billion exports, strengthened industrial expansion, and enhanced quality and standards infrastructure. You heard how Trademark Africa was helping through the National Bureau of Standards. Despite deepened regional trade diplomacy with the East African Community, the COMESA, the expanded market access to UAE, the wider Middle East, China, and Europe, we still had this trade deficit.
Finally, on News Now, the Egyptian Exchange launched its futures market on March 1, 2026, starting with futures contracts linked to the EGX 30 index. The first phase introduced 3-month and 6-month futures, marking a key milestone in the development of Egypt's capital markets and derivatives infrastructure. EGX Chairman Islam Azam said the launch followed the completion of regulatory licensing by the Financial Regulatory Authority and the approval of trading and settlement rules. I am Melissa Enoch, and that's it on News Now for today. The show returns shortly with Grace at the FMDQ ticker tape room, giving us our market updates.
First, we observed that our financial sector continued to expand alongside solid economic performance, supporting increased credit to households and businesses. Total financial sector assets from January to December 2025 increased by about 24%, reaching 15.9 trillion Rwandan francs. And this was on the back of deposit growth, which enabled growth of loans, higher pension contributions, improved investment income, and improved insurance premiums. Importantly, the growth that we recorded in the financial sector was recorded in all subsectors. Banks' assets increased by 22.7%. For microfinance institution, growth of assets was at 22.9%, and the insurance sector grew by 14.3%. When we look at the pension sector, their total assets also grew by 35.3%. And in non-deposit taking financial institutions, which are a new category of institutions that lend but do not take deposits, the decline of 10% that we see is not due to the shrinking of their balance sheets, but more from the transfer of BDF assets to BRD, the Rwanda Development Bank.
This year, we will continue ramping up waste mining and invest further in our fleet to improve reliability and drive for greater operational efficiencies. Our focus on operational excellence delivered over 600 million rand in costs, bringing the total amount of savings since our reconfiguration began in 2020. Sishen's cash unit costs remain broadly flat at 530 rands per ton, while Kolomela's improved by 7% to 374 rands per ton, outperforming guidance. Despite four derailments, all railed to the port increased by 6%. Rail performance increased by 6%. Rail performance improved to 84% of contracted capacity, and with better equipment availability at Saldanha Bay, sales lifted by 2%. This progress reflects the collaboration between Transnet and the All Users Forum, of which we as Kumba are an active member. We recognize, however, that there is still more work to be done, and the Ore Corridor Restoration Program and the Mutual Cooperation Agreement are also going to enable faster, more efficient maintenance and improved reliability.
Welcome back to Money Moves. Let's now go over to Grace for today's market reports. Hello there, Grace. How are the markets wrapping up on this fine Wednesday?
Hi, Melissa. Let's take a look at how the markets traded today, starting off with the equities. The NGX All-Share Index slipped 0.08%, while the BRVM declined 0.79% to 415.31. The Nairobi Securities Exchange dropped 2.16% to 208.22. In the South, the Johannesburg Stock Exchange rebounded, gaining 1.70%, while Mauritius Semdex slid 2.07%. In North Africa, Morocco's MASI rose 1.56%, while Egypt's EGX30 is 0.59%. On the currency front, the rand strengthened 1.20% to 16.33 against the US dollar. The Egyptian pound firmed 0.41%. The CFA franc gained 0.23% to 563.28. The Kenyan shilling advanced 0.09% to 129.15. The Moroccan dirham edged lower by 0.09%, and the naira weakened 0.39% to 1,384 naira 30 kobo as at 14:09 GMT. Let's switch into the commodities data deck, beginning with energy prices. Brent crude fell 0.92% to $80.65, while US WTI slid 1.30% to $73.59. Natural gas dropped 4.03% to $3.93, while RBOB gasoline edged up 0.12% to $2.46 as at 14:03 GMT. Finally, to metals prices. Gold climbed 1.40% to $5,195.40. Copper rose 1.50% to $5.91, and platinum surged 5.04% to $2,180.20. Aluminium added 1.90%, while iron ore eased 0.24% to $99.57 as at 14:04 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those market updates. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching, and we'll see you all same time tomorrow.